Hi guys, Lee here from Trading College. On this video, we're going to talk about some trading money management tips. And this is something I've been doing for well over 10 years now. I've been trading the markets for nearly 20 years. And when I started doing this, it made my trading much more relaxing, much more stress-free, and much more enjoyable. And it really did build the confidence. So we're going to talk about something I've been doing for a little while. I just want to show you what I do, and have a think about it. It might help you. Now, let me show you some of the open trades that I'm in at the moment, okay, and show you what this is all about. Okay, so the first trade here is the Dow. 5,540 odd pounds. Okay, it's changing all the time here. The dollar CAD making 71 pounds, and the Nasdaq losing 148 pounds 20. All right. Now every one of these trades I've scaled into the trade. What that means is I've done more than one entry on the trade. Now what most people do is they get a strategy and they go long the market with 2% risk, and then they either get stopped out or they make money. All right, that's the general thing about trading, and people teach that. And and the problem with that is that because you're new to trading, you haven't quite got the skill level now down yet. You're still learning your profession, and also that you are a human being. Now, human beings like us, me, you, we have emotion, okay? So we tend to, at the start, chase trades. We buy too late. Are you somebody that's bought the market, maybe an FX pair, and then it stopped you out, and then it went in the direction you thought it would do in the first place? And you get frustrated, you lose that confidence. So this style is something I'm going to show you now that you should think about. I'm not saying do straight away, and certainly do it in your demo account to start with, because as soon as you do this, and when I teach this to my students and mentorship students, it is like a breath of fresh air, and the whole trading stress levels go down, which is great, and that's what you want. You don't want to trade stressfully because it's just not worth it. Okay, so let me just talk you through this, and let's look at this. Now, if you look at the Dow here, this Dow in the spread bet account has got 12 pounds per point in this position. Now, I have not gone long the Dow. The Dow's a hefty old market. It trades at 30,000 over here. Now, I have not gone long 12 pounds per point right from position A when I got my signal. All right, I built it because it's been in a lovely uptrend. I want to give the trade room to breathe. I want to really give my position room to breathe. I don't want to put a stop too tight, because we know that the market goes in waves, and those pullbacks, those down waves, can stop you out before it goes higher. So this is the sort of thing I do. Okay, so let me just pull this to one side. Now, you have your trading strategy, whatever that strategy is, and you're using a strategy. You've got to have a strategy to have an edge in the market. Let's say your strategy says buy here at this price. Now, your stop loss, if you're going to go long, is going to be below the price, of course. Now, you might well be risking 3% on that trade, or 2%, or 1%, whatever your trading plan decides on, or whatever you decide for your trading plan. So, what normally happens is you go long, you get a buy order here, and then suddenly you get stopped out, and that 3% is wiped out of your trading account. Your stop is at a certain position, and so on. What I like to do is I like to do 2 positions. So a 2 position scale in. You could do many more if you want to. Let's just start with 2. Okay, same strategy. We're going to buy it here. I would then, instead of going, let's say you're going to go long, your 3% was £2 per point. Let's say you go long at £2 here. What I do, I split that up. I go long 1 here, and then I go long 1 down here. And then my stop is going to be a little bit further away than it would be if I was doing just a normal 1 position. Now, the key here is to remember, and you've got to work it out yourself, the maximum loss on the trade does not change. Instead of doing £2, you're splitting up doing 1 and 1, but your maximum loss is still going to be the same percentage on the trade. Okay? But what you're doing is, instead of, this is where your normal stop is. If you enter here and it comes down to here and you get stopped out, I'm basically looking to buy another position when you're getting stopped out. Not saying you personally, but you know, a trader is getting stopped out. So I then don't jump around from market to market and do 2% over here, 2% here, 2% here, and I've got 7 or 8 trades. I'm focused on 3 markets, maybe maximum, you know, in my account, because I'm building a trade. Now, this is completely different from bad money management techniques, which is called catching a falling knife and adding to losing positions. Adding to a losing trade is completely different. So let's say you go long at £2, and this is your 3% risk. And then the market starts to drop, you go long again, and it starts to drop, and now your strategy is invalid. And you keep on adding and adding and adding £2 and £2 all the way down until your account blows out. That is not the key. This is not what we're talking about. We're talking about having a structured scaling in process, whether the market goes in your favor or against you. All right, but you're still risking the same percentage. You've got to work it out on the calculator where your stop position is going to be, where your next entry is going to be. Think about looking at maybe, you know, round numbers like 100, 50, maybe even 25s. Okay, so let's say you're going long here, and this is at 120. Let's say this is 100, and then you might want to go long at 50 down here, and then, you know, whatever it is, or 25 points away and so on, but you're still risking. Now, you might be doing this already with your day trading, but this is all done for me really as a swing trader. All right, so as a swing trader, I'm buying today, holding for weeks on end if I can do. And especially when I'm going for those big blue whale trades, which are done from the monthly chart, which could last like years, you know, I want to be scaling into those trades and giving it room to breathe. All right, so what I'm doing here is, if I'm going to go long here, instead of doing £2 a point, I'm going to scale in 1 and 1 with my maximum loss here. If I'm doing a 3, okay, you want to be doing like, if you're going to go long £3 a point, you could do it a 2. If you're going to go long £3 a point here, you could enter 2 and 1, which is a 2 position one here, okay, or 1 and 2. You get a better average price on that. Or you could go 1, 1 and 1, stop here. It's so much less stressful. The reason is because you have to get it right straight away if you're doing a 1 position entry. If you're doing a 1 position entry here at £3 a point, your stop's here, you've got a news announcement might come out, stop you out, the broker might run your stops, you know, and it's at support level and it just dipped through and you stopped out. I don't know, you know, you just might get your entry slightly wrong. You know, you're still learning this profession. Get those stops wider. Get those stops wider. Get your position size and percentages right, and break the position size up. And when I've done this with new students that have come to us and already had some experience trading, and they've been unsuccessful before, once we start to build positions, you know, it's so much less stressful, and trades that were losing money now go into profit. All right, you've got to, and I'm going to say it for the 5th time, manage the risk. You're still doing the same percentage risk. You're just breaking that position size up at the start, okay, to give it more room. Now, one of the things when we were doing the webinar the other day and talking about this to our students, one of the things was, what's the negative side of doing this? Well, the negative side is that, let's say you want to go long 3 here with 1 position size and your stop's here. If the trade starts to go up, you're making more money with £3 than I would be if I went long with £1, because my next position is going to be £2 here. Fair enough, fair enough. But because it's a swing, this is the Dow swing trading strategy that we want to use. As it goes up, well, I'm going to start to scale into the trades at different areas here. You know, I could be more flexible. And when what happens, and this often happens, and we'll go back to this Dow trade, this is 12 £1 here. It's kept on going higher. The trend's been bullish on the Dow. Every pullback I buy, maybe take a little bit more profit off this one and add again and then get up to 12. It keeps on going. But what happens is, if you keep on buying the market, if the strategy is still valid, if the trend is still going up, you're buying at different areas and you're adding. You've got to move your stop on those first few to break even, because then you then release more capital. Because if you went long here at £1 here and £1 here, your stop loss goes to break even. You can't lose on those trades. Now, when you get in on your final position, maybe on the next pullback here, this one might not work, and this one's losing you money, where all of these ones are making you money. And so with the whole position size that you've built, and this is great for small accounts if you've got the ability to do real small positions on the outset. It's great for, you know, micro accounts, mini lot accounts, or, you know, 10p and 50p trade and spread betting accounts. You know, this could be making money, this will be making this, and maybe this position might not be making, but the overall pot is up £5,200. And it's going to take a lot of practice. I would definitely practice this in your demo account. You've got to remember that you are risking the same percentage, because instead of doing £3 or £2 long, you're splitting that in half and doing 1 and 1 or 2 and 1. Obviously, that's not in half. And you can then, as it goes in your favor, the trade, and you're making money, you can add to the position even. People say, well, if I add to the position, it's going to lose money, but your other trades are losing money and should be making more than what you're going to risk on this, okay? It doesn't always happen, because what could happen is that if I go long, if my normal position size is 3, and if I go long 1 here and 2 down here, you know, the strategy goes against me and I'm out. But I'm still out for my maximum loss that I would be if I went long with one position size here of 3, not 3%, but £3 per point, and you know, I'm out. It gives the trade more room to breathe. It allows the trade to work, and this is what's happened here, guys, with this losing trade. Let me find the losing one. Okay, this one here on the Nasdaq, I've gone in on a small position of £3 because, you know, it's a bit of a counter trend trade. It's you know, I just want to throw, and I call it nibbling on the trade. You know, you have a little nibble, put your toe in the water. It's exactly what I've done with the with this trade as well, on the DAX. So this one's making about 20 grand. Now it's £50 a point on the DAX. I'm not going to go long with one position in the DAX at £50 a point, guys, because I don't want to risk getting stopped out straight away. What I do want to do is, if I've got a good trend and the strategy's there, I want to build the position. And then when it really takes off, you're in it with different positions at different areas. Start off with a 2 position, because if you start doing more than that, you're going to start to lose concentration of which trades where. But just start with a 2 position size, doing a demo account, and just practice it. And then do a 3 position size, split it up. Instead of doing £3 straight away, do £1, £1, £1. And you know, what's so good about this is that you feel like you're in control, and it builds confidence instead of the market controlling you, and so on. All right, and you've definitely got to do this if you've got a strategy, because the strategy's got to be a high probability strategy. And if the trade sort of if the setup sets up, it still could lose money. But at least you're losing money at the start with one position. You can always cut the trade, and so on. All right. So let's look at this was an interesting one. If you look at this is the dollar CAD. Okay, we had a pro trend system buy here and here. It's dropped dramatically. Now, you know, as it starts to move here, there's like a 400 point move, 300 to 400 point move in the Dow. Let's say, you know, 300 point move. You know, if you go short here with all of your £3, that's perfectly fine. You know, we're pushing lower. But if I split the position up into ones, ones, and ones, I can literally, as it starts to go in my favor, which it did really well here, I can get this stop to break even and then start to do other positions, because it frees that percentage risk up on the trade. All right, and you know, you could just get that stop to break even, stop to break even, next position, stop to break even, stop to break even, and so on. It's something to think about. It really is, you know, and it just allows you, when you're at the start of your trading career, to enjoy it a bit more. But you've got to have that strategy in place. And I think, for me, teaching you this, it's got to be a swing trade and not so much a day trade. You can do it as a day trade, and I've done it many times before as day trades. You don't want to, you want to sit back and relax and let those trades come in. Let the trade mature like a nice fine wine. Open it up, get long that market, let it breathe, and then start drinking that lovely wine, or start adding to the position. If it starts to go against you, add your next position, making sure you're managing your total risk on the trade. And then where people are getting stopped out the trade, you're entering your next position with that stop a little bit lower. All right. Hope it helps. And this hopefully will help give you a little bit of a tip on money management. And it's just something a little bit different. Remember, you're not catching a falling knife, or you're not trying to add to a really bad losing trade. You're just getting ready to pounce for that next big swing trade using your strategy, and you're adding and controlling and scaling into those trades. All right. Hope it helps. Don't forget to subscribe to the channel, guys. We're doing loads of more free education videos like this, things that are different than the mainstream stuff for you, and real trading, examples, real things that are going on with, live accounts in the market. Give us a thumbs up, and hopefully see you on the next video. Take care.